on the one hand, you've seen a lot of investors dump things that have taken a big hit this year. Think some of those growth stocks, right? A lot of people have abandoned those trades. What we've seen with Tesla, on the other hand, is you have these really enthusiastic individual investors doubling down on it and buying the dip in Tesla. What was surprising to me is that they've ramped up purchases in the stock. It's been the fourth most popular stock or ETF for individual investors to buy this year, up from 12th last year.
This call is a little bit all over the map because the analyst here, impeccable, we often cite his work, sell rating, but he's saying the stock could rise coming out of this quarter if Tesla reports any upside related to EPS or auto delivery. So kind of talking out of both sides here.
We tend to get some pretty big swings in Tesla shares after the numbers, so we'll be watching that closely.
In this video, on the cusp of Tesla's Q3 earnings, a genius stock investor with an impeccable track record of being wrong says Tesla stock is worth $141 per share and is advising investors to sell Tesla stock. Meanwhile, short-term gamblers are betting heavily that Tesla stock will be going lower after Q3 earnings, and retail stock investors, who are obviously stupid and don't know how to invest, are aggressively buying the dip. Oh, by the way, have you joined Patreon yet? Oh, you have? Good. I was a little bit worried you might be missing out on 180 exclusive videos and my Tesla stock price targets. So, of course, I won't need to mention joining Patreon with the card in the corner or the link in the pinned comment, because you already have. So you guys may not know this, but I'm actually a really successful artist as well. This picture is called The Calm Before the Storm. Tesla stock going absolutely nowhere today, up a little over 1/3 of 1%. Spitting distance from a $690 billion market cap. Nice. Tesla reports their Q3 earnings tomorrow, and as always, I'll be streaming the earnings call with plenty of additional info and context, courtesy of Clean Technica. I'll see you guys there. Make sure you come and say hi in the live chat. Seems like the stock market is taking a wait-and-see approach to Tesla stock leading into earnings. Looking forward to seeing how Tesla stock reacts to the earnings.
All right, switching gears from pet food to cars. We're also watching shares of Tesla after Citi reiterated its sell rating on the EV maker, saying the update in Q3 has not completely addressed macro concerns. This call is a little bit all over the map because...
You guys see that? The evolution of Brian has been stunning to watch over the last 12 or so months. He literally laughed. Let's just watch that again.
Macro concerns. This call is a little bit all over the map because the analyst here, impeccable, we often cite his work, sell rating, but he's saying the stock could rise coming out of this quarter if Tesla reports any upside related to EPS or auto delivery. So kind of talking out of both sides here.
So who is this analyst and are they credible? Well, it turns out they are. We're on the tipranks.com profile here of Ite from Citigroup with an astonishing perfect 5-star rating. This is truly incredible. This has got to be top 0.1% shit right here. Well done, Ite. Congratulations. For a minute there, I thought you might be a moron due to your $141 price target on Tesla stock, but I was hang on. Let me zoom in here, guys. I think I made a mistake. Let me just get in on those arrows. I think there's 1/4 of a star filled in here. This wasn't 5 stars. This was 0.00001 stars. And yeah, I should have read the numbers here. Ranked 7,843 out of 7,987. Ranked 22,022 out of 22,525 experts on TipRanks. Credit where it's due. To be this bad is quite an accomplishment. We're going to be talking about bottom 0.1%. Round of applause to Ite. So obviously we can take everything this guy says seriously, especially about Tesla due to this incredible track record of 1/4 of a star out of 5 stars. It really does take skill to be this bad.
Yeah, I mean, even if we think about what Tesla has put out thus far and how they're going to continue to run into, in China especially, a region where there is more of the appetite from the consumer to actually go towards some of the homegrown brands. And I think that's something not just across automobiles and vehicles. It's actually something that we've seen already referenced from a company in Nike as well, and analysts that cover some of the athleisure space. Of course, largely different purchase, but still the consumer sentiment, or at least that propensity, that still remains. And so with that type of trend that we're seeing right now, what does that spell out for not just the Tesla Shanghai production, but also where they see future demand continuing to come in too?
Yeah, and Tesla reports after the close of trading tomorrow. Analysts looking for $1.02 in terms of earnings per share. We're going to be paying attention to the outlook, of course, as well, and see, we tend to get some pretty big swings in Tesla shares after the numbers, so we'll be watching that closely.
For some reason, big swing is kind of reminding me of something. I just can't quite put my finger on it. What does it mean when you have a giant dick across your chart?
Countdown to Tesla earnings? It's on. They report tomorrow after the bell. Now, it's been a rough month for the electric car maker, down 17%. And Citigroup reiterating its sell rating on Tesla this morning, saying macro concerns remain front and center. One trader in the options market seems to agree, making a big bet for more downside. Let's find out more about it with Mike Coe and the options action.
Tesla options right now implying a move of a little over 8% by the end of the week. That's greater than the 5.5% that the company has averaged after the last 8 reported quarters, although last quarter it moved about 10%. A lot of those bets are betting that the stock is going to move lower. The most active contracts were the October 220 puts. Those expire on Friday. We saw over 70,000 of those trading for $8.50 a contract. Buyers of those are betting that Tesla is going to trade below that by at least $8.50, down 4% or more by the end of the week.
Just wanted to wish the best of luck to all the traders betting on Tesla being down after earnings by a reasonable amount. Hope it works out for you. I'm not smart enough to be trading, so I just buy and hold.
Gunjan Banerjee is lead writer for Wall Street Journal Markets Live and a CNBC contributor. It's great to see you today, Gunjan. I want to just read the line from your article. Many individual investors have ramped up purchases of Tesla despite its 38% decline this year. You write despite. Is it really because of its 38% decline? To Randy's point, it's on sale?
Well, surprise, surprise. They're talking about us. But hey, fair's fair after all. I spent a lot of time talking about them as well. 99+% of the people watching this channel are Tesla retail stock investors. Let me ask you guys and girls a question. Do you think Tesla stock is currently on sale? 2, have you been buying the dip or wishing you had any money to buy the dip? With a long-term investment horizon, are you aware of any better risk-adjusted opportunities available? If so, please let me know. It's interesting at this point in time. A lot of these so-called experts are warning investors to stay away from Tesla stock, like our friend Shitay from what was his name? Shitay? I can't remember what his name. I don't know. The guy from Citibank or Citigroup. Citigroup, whatever they're called. Shitay works for Shitay. Interesting. Anyway, many of the so-called experts at this point in time, with Tesla literally hovering around 52-week lows, are running scared from the stock. Meanwhile, retail investors are loading up. Someone's going to be rather wrong. I wonder who.
So it's interesting, Contessa. On the one hand, you've seen a lot of investors dump things that have taken a big hit this year. Think some of those growth stocks, right? A lot of people have abandoned those trades. What we've seen with Tesla, on the other hand, is you have these really enthusiastic individual investors doubling down on it and buying the dip in Tesla. What was surprising to me is that they've ramped up purchases in the stock. It's been the 4th most popular stock or ETF for individual investors to buy this year, up from 12th last year.
This is rather telling. From 12th to 4th. What a jump. Either retail stock investors are morons, or maybe we've noticed some opportunity. And speaking of noticing things, as most of you will know, I read every comment on this channel. It's great insight into sentiment and so on. And over the last few months, as Tesla stock has continued to get pounded lower, the TesłaQ dolts have been coming out of their basements in droves, trolling. You're an idiot, Tesla's going all sucked in, mate, you're wrong, blah, 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 blah. I just want to address some of these hilarious comments. Obviously, at this point in time, with Tesla close to 50% down off all-time highs, in this tiny window of time, the TesłaQ virgins finally feel like maybe they might have been right after all. I won't rain on their parade, so let them have this one. I do have a funny feeling we're around peak insanity. I don't think Tesla's current valuation is going to last long. Now, I could be wrong. After all, I'm not dumb enough or arrogant enough to make short-term predictions about what a stock will do, especially Tesla. And yes, there are a couple of exceptions. I have gone out on a limb here twice this year and made a short-term prediction because I had an extremely high level of confidence. I did so at great personal risk because I'm not a moron and short-term predictions are fraught with danger. I literally said those things before making my idiotic short-term predictions, but surprise, surprise, I was actually right on both accounts. The most recent, of course, Tesla stock's perfect storm about 2 weeks ago, suggesting strongly that in the wake of Q3 delivery numbers and AI day, Tesla stock likely to get pounded a lot lower, and lo and behold, nail on the head. There's a very important distinction that must be made. What Tesla stock is selling for, what people are buying Tesla stock for, the price of Tesla stock has literally nothing to do with the long-term thesis or the company's execution. Occasionally, there's a correlation, but most of the time, there is a huge disconnect. One of the hilarious things I've seen from the TesłaQ virgins coming to troll in the comments is a total lack of awareness of the difference and the disconnect here. If Tesla stock's down, it means that Tesla, the company, is failing, that the thesis is wrong, that EV adoption isn't happening, that they don't have industry-leading profit margins. This is the level of thinking or the lack thereof that I'm seeing now in the comments over the last few months. The amount of self-immolation in the comments from these Tesla Q virgins is reaching peak levels. Just between you and I, it's in my best interest that Tesla stock goes much lower. I'm still accumulating with every spare cent. I'm a long-term investor. And while short-sighted investors who may also be short on grey matter, I'm not sure if those things are directly correlated, but there does seem to be a bit of a trend, are focused on what Tesla stock is doing. I'm focused on what Tesla, their company, is doing and loading up on as much Tesla stock as I can. In 2032, I know who's going to be laughing, and it won't be the self-hating adult virgin still living in his mum's basement.
So despite all these calls for a sharply different market environment, right? Yields are at the highest level since the financial crisis. People all of a sudden, have other places to park their cash. There's been an upending of the US stock market with tech growth taking a huge hit. But what we've seen among individual investors is they have hung on to stocks like Tesla, Apple, other tech stocks, and increased their purchases of them.
So you say that Tesla is the fourth most popular stock or exchange traded purchase among individual investors. Apple is the most popular. Give me a sense of what is the draw for Apple. And I don't know, Gunjan, I'm always curious whether with individual investors, they're buying what they know, and they know what Tesla makes. They know what the company's about. They certainly know what Apple's about because a lot of us have Apple incorporated into our daily lives.
Think about during COVID-19, the initial market crash. These stocks kind of became the safety trades for a lot of investors. When everything else was going down, it seemed like Apple, Tesla, the NASDAQ were the only things going up that really became the safety trade. And I think a lot of investors still think of them that way. And Apple and Tesla, they are some of the biggest companies in the market. But their importance to the market really transcends their size because, as you mentioned, they're stocks that people know and really believe in. Both of these stocks, Apple has become an economic bellwether of sorts. Tesla has become a gauge of broader investor sentiment of the market itself. So I think these stocks have just become favorites among individual investors with incredibly excited, enthusiastic bases that are still hanging on.
Gunjan, there's often the feeling that when individual investors swarm into the market, it's a time to sell, and when they swarm out, it's a time to buy. Can you infer from that sort of old saw anything about these two stocks? In other words, that with the amount of individual investor enthusiasm for them, it might be a counterintuitive sign.
So I don't believe in, the dumb money, smart money stereotypes out there. And I think they've really been proven wrong over the past 2 years, where individual investors in several cases have come out looking a lot smarter than many would have anticipated based on those stereotypes.
Now, this is a fascinating point. Less than 3 years ago, I started this YouTube channel with Tesla stock split adjusted about $36 per share. I can't even remember, there's been so many splits since, which is kind of making my point for me. Fact check, wrong. Now, sorry about that misinformation. The official fact checkers from the Ministry of Truth have informed me I was wildly inaccurate with that statement. Tesla stock was in fact $22.20 per share when I started this YouTube channel. That means Tesla stock is up almost exactly 10 times in that less than 3 year period. Just want to show you guys visually again, just to illustrate the point. Look on the chart. That's where I started this YouTube channel. Look what Tesla stock's done since. Why did Tesla stock do this since? It's not because I started a YouTube channel. It's because the dumbasses on Wall Street started to figure out what was obvious to others years earlier. And that brings us back to the present moment. You see where I'm going with this? If you don't, too bad. I'm not going to explain it. At that point in time, almost everyone on Wall Street was completely fucking wrong. Almost everyone in the mainstream finance media was completely fucking wrong. Yet, many retail Tesla stock investors were screaming from the rooftops, forum posts, tweets, YouTube channels, podcasts, hello guys, the opportunity, hello, laying out the entire thesis which has since played out. This one example, retail understanding Tesla years before Wall Street. Wall Street still doesn't get it. Was an indictment on the traditional finance, Wall Street, stocks analyst, wank, wank, wank industry. You know why people watch this YouTube channel? Because I was right. That's the facts, okay? Dumb jokes and bad acting aside, people tune into this channel because I'm credible. People ignore Wall Street analysts because they're not credible. The Wall Street wankers, the talking heads in the mainstream finance media, have officially been dethroned. Decentralized content from individual creators like myself is now reaching retail investors who have options. Previously, the only option anyone had was to watch the idiots on CNBS, who'd occasionally be right, most of the time be wrong, but aren't held accountable, so who cares? It's light entertainment and nothing more. With the rise of YouTube, Twitter and other platforms, the tide has gone out. Wall Street is being exposed for the incompetent, useless juggernaut that it really is. Now, to be fair, there are some decent analysts out there doing decent research. It's just they're major exceptions to the rule.
But I will say I have had investors tell me that they think that, the rush into Apple, into Tesla is a sign that, the broader market and even those two stocks are still in a bubble. They think it's a bad sign for the broader market that they've kept going up, given, this jump in yields that we've had, the fact that so many people are calling for this different market environment. I had one investor tell me, I think Apple and Tesla will kind of be the last shoes to drop. I think it's going to mean pain for the broader market when, he said, they eventually do fall.
Yeah, I'm kind of with you on the smart money, dumb money thing. Because the smart money, if you're thinking of the smart money, meaning hedge fund managers, they haven't done very well lately at all.
So with Tesla set to report earnings within a few hours, depending on when you watch this, or maybe they've already reported, Tesla Q echo chamber is absolutely convinced this is the end. Tesla stock can only go lower from here. That, coupled with some of the true examples of the Dunning-Kruger effect, some Wall Street analysts with $141 price target, short-term options, gamblers, traders, whatever they call themselves, regular patrons of the stocks casino, betting against Tesla, expecting the stock to come down after earnings. I only have one thing to say. Good fucking luck. I'm nowhere near smart enough to be playing in the stocks casino. My brain's just not big enough to figure out what the stock's going to do on short-term news. So rather than attempting to make a quick buck, I'd just rather create substantial wealth over the next decade or two by buying and holding what I currently believe to be far and away the best risk-adjusted opportunity, at least that I'm aware of, in the stock market. Oh, hang on, guys. Getting a call. Hey, what up, Elon? How you doing, brother? Yeah, long time no speak, hey. You've almost sold out of the burnt. Oh, that's amazing, all right? They don't get it, do they? Because of the earnings and the burnt hair, the stench of barbecued short sellers, losing their backs, getting absolutely roasted, literally scorched, nothing left but ashes. Fucking hell, dude. Yeah, that's just so brilliant. And they didn't even see it coming. They didn't make the connection, did they? The burnt hair, that's so dumb. All right, see you later, mate. Take care, bye. P.S. I love you. So that was nothing, and you should join Patreon. Love ya.